So I have been receiving a lot of questions about all-time high stocks. A lot of my YouTube subscribers have been asking me, Rohit, how can I use MarketSmith to filter out those stocks that are making all-time highs? That is the first question. The second question is, should I buy stocks that are at an all-time high? And the third question is, how should I buy stocks that are at an all-time high? I want to address these three questions in this video. Okay. And I understand where these questions are coming from. People read books on trading, people watch YouTube videos. There is a lot of buzz around all time high. The term sounds very exciting. Okay. You have to understand that what you see on the chart is the effect, it is not the cause. Okay. So let me explain. Have a look at this setup. This is our normal VCP setup. The stock goes up. Step number one is high volume rally. Step number two is low volume consolidation. And step number three is high volume breakout. So from this buy point, the stock would break out on high volume. This is the buy point. This is the stop loss. In general, that is our setup. You may not want to keep your stop loss here. You might want to keep it at 8% somewhere here. If you are a conservative trader, you might want to keep it here. This distance could be 2 to 3%. That's a decent way of taking the VCP trade. At this buy point, what is happening is the retail supply is at its lowest because the base is tightening on the right side. And this setup only applies to confirmed stage 2 uptrending stocks. Okay, confirmed stage 2 uptrending stock means the 50-day moving average is above the 150-day simple moving average, and the 150 days above the 200-day simple moving average. Preferably, the price should be above all the three moving averages, and preferably all the three moving averages should be sloping up. That is called as a stage 2 uptrending stock. So this setup applies only to stage 2 uptrending stocks. Okay. Notice here, this is the 52-week high, and that is also the all-time high. This is the highest price ever achieved by the stock. So people are interested in buying the stock at the all-time high. Now, why is this so? Let's try to understand. As I told you, the chart is an effect. It is not the cause. Don't get excited by these terms called all-time high, 52-week high. Okay. You have to understand what is happening behind the curtain, which I will explain you now. So first, what is 52-week high? So let's say today is 12th of March 2025 as I record this video. So if I go back to 12th of March 2024, that 1 year period from 12 March 2024 to 12 March 2025, that's a 52-week period. I will check the chart to see what is the highest price at which the stock has been traded in this particular time period. That's the 52-week high. Okay. Coincidentally, it could also be the all-time high of the stock. So that's the highest price that is being achieved. Now, if you look at the VCP setup, here the retail supply is at its lowest. So there is a high probability that the stock might break out on the upside. There is a low probability that the stock might break out on the downside. Why is there a low probability? Because it's a confirmed stage 2 uptrending stock. Now, if the stock is fundamentally weak or the base is not properly formed on the right side, there is a high probability that the stock might break out on the downside rather than the upside. Okay. What is happening behind the curtain? Here, you already know I have taught you this concept that the retail supply is at its lowest. So institutions are accumulating the stock. In this low volume consolidation phase, what is happening is the stock is going from retail investors or traders to the institutional investors or traders. Okay. I have explained this entire process in one of my videos. You can check my YouTube channel. I have explained each of these ups and downs, so exactly what is happening inside that behind the curtains. Here I want to talk about the 52-week high. Now we know that there is someone who has bought the stock at this price. There is a guy who has bought the stock at this price. Okay. And let's assume that this base has been forming for 2 to 3 months. The guy who has bought the stock here, he is sitting on a loss right now. In fact, for 2 to 3 months, that guy is sitting on a loss. So he is frustrated. If you look at his psychology, for him, this is the price at which he bought, and he's been waiting for 2, 3 months. The stock is not moving. Okay. So by the time the stock reaches here, he has already given up on the stock. Forget about profits. He's saying, forget about profits. I've been waiting for 3 months. Even if I'm able to get out at break even, I am fine with that. But I don't want to deal with this stock. Okay. So, this guy who bought the stock here is planning to exit the stock exactly at the time when he should be thinking of entering the stock. Okay. Now, that is irrational behavior, but we know that the stock market is a place where irrationality is very common. But, anyways, coming back to the discussion, this guy is frustrated because he's been waiting for too long and he's not. I mean, he just wants to give up on the stock. He's holding it because he doesn't want to book a loss. So it's like a loss aversion behavioral bias. Okay, he doesn't want to book a loss. He will wait till the price comes to this level and he will be the first one to sell. So along with him, there could be many other people who would have bought the stock in that range. So that supply which is coming from these people, that is called as overhead supply. Okay. And when the stock breaks on high volume, breaks out on the upside on high volume, that volume is so overwhelmingly large is that it not only absorbs this volume that is coming in, this selling that is coming in, which is the overhead supply, that high volume not only absorbs that selling, but it continues to push the stock up because people are excited about the stock now. Imagine that there are 10 people, big investors who have bought the stock here. Now they are frustrated. Okay, they have big holdings. They want to get out of the stock. Now suddenly here the stock breaks out. Everybody, institutions, retailers, everybody is piling onto the stock. Those 10 people, the big institutions who are holding on to the stock, they get an opportunity to exit because they are anyways planning to exit, right? They get an opportunity to exit. Now you tell me, when these people sell, who do you think are buying? The people who are piling onto this stock here, they are the ones who are buying. So they have bought the stock today. They have bought the stock recently. Now, when that happens, when these recent people absorb this supply, do you think that they will give up on the stock that they have bought so easily? No, right? So the volume that comes after this supply is absorbed, what is that volume doing? That volume is trying to entice these people who got the stock at this price. That volume is trying to entice these new investors to sell their stock, because when these people sell, there is no seller left in the market, in the stock, right? There are a limited number of shareholders, and these are the shareholders who are looking for an exit. The promoter group is not looking for an exit. These are the shareholders who are looking for an exit. Now, when they exit, their place is occupied by the recent guys. Now, recent guys, you can't ask them to sell immediately, right? However, remember that the stock market is an auction market. It is not a normal market. So, if a person has bought a stock today, and if you want to snatch that stock away from him, the best thing you can do is by offering a higher price, right? And when you offer somebody a higher price, what happens to the price? If that trade takes place, the price obviously goes up. That is why you see stocks shooting up like 10-20% in a single day. Remember Tata Investment that shot up 20% on 17th of November 2023? You remember that stock? Then Persistent System broke out in November 2023. In December 2023, IRFC broke out, shot up 86% in less than 1 month, less than 2 months, right? Why is this happening? Because these people who who got an exit, okay, those people were replaced by new traders and investors. Now they are not willing to sell their stock so easily because they bought with the anticipation that the stock is going up, stock is going to go up, right? So if you have to kick them out, not only do you have to come with high volume, you have to come with high volume and offer them a higher price. It's like you look at a real estate property, okay, and you go to the owner and you offer him 1 crore rupees. He says, no, I don't want to sell. Then you offer him 1.5 crore. He says, no, I don't want to sell. Then you offer him 2 crore. He says, no, I don't want to sell. You go to 3 crore. He says, no. Then you directly go to 10 crore. There is a chance he might sell. So everybody has a price in the financial markets or in any kind of market. Okay. There will be a price at which the existing shareholder would be willing to get rid of that stock. That is called getting rid of the overhead supply. That is why when the stock breaks this price, the stock starts to go up because that overhead supply gets absorbed, replaced by new shareholders. To entice those shareholders to exit the stock, you have to offer them a higher price. And in that process, the price continues to go up. Remember what I said just now, the stock market is an auction market. Why did I say that? Imagine you see a movie there, the paintings are at auction. In the movies they say, one guy comes, he says, I will pay $1 million for this painting. Another guy comes and says, no, I will pay 2 million. Another guy says 5 million. Another guy says $10 million, and the deal is done. Okay, how come the price went from $1 million to $10 million for that painting? How can the price go up 10 times in 5 minutes? Well, that happens because the painting market is an auction market. The museum quality painting market is an auction market, right? The groceries that you buy, that is not an auction market. That's a normal market. When you go to the grocery store to buy vegetables, to buy bread, to buy eggs, to buy a toothpaste, those are normal daily essential items, right? Imagine the price of bread going up 10 times in 5 minutes. If those kind of things start to happen in the grocery market, people will be standing outside the parliament protesting, right? So that's a normal market. Okay, you can't bump up the price by 10 times in 5 minutes. It's not going to happen. But in auction market, it's like a free market. Anybody can choose to pay anything for a stock. Today the stock might be trading at 1000 rupees. After a few months, you might find the stock trading at 5,000 rupees because people are willing to pay that price, right? So if people are willing to pay a price to the investors who bought the stock at this price, the price is going to go up because the offered price is much larger, and that too on high volume, because people have a fear of missing out. Okay, so they will pay a higher price. They might think if they don't pay a higher price today, the stock will continue to go up and they might miss out on a double in the stock. Okay, coming back to the all-time high question. In this case, you see 52-week high is the all-time high. So when that level breaks, okay, it's a very crucial turning point in the market and in this stock, and that should happen on very high volume. Okay, if it's not happening on high volume, the probability of the breakout sustaining is very small. That is why high volume breakout is what we are looking for. Now, this is one situation where the 52-week high is coincidentally the all-time high. Another situation is this. Have a look at this. See, now this is the 52-week high and this is the all-time high. Okay, remember what I said. What is the 52-week high? You go 1 year back from today and you check what is the highest price. So in this case, the all-time high could have been a price which happened like 2-3 years ago. Okay, so of course, when the stock breaks out here, this supply that is coming from here, that supply is getting absorbed, right? But you might ask, Rohit, what about this supply? What about the guy who bought at this stock? What about the guy who bought between this price and this price? If I had to draw horizontal lines here between this price and this price, even those people are still stuck in the stock, right? Imagine somebody bought below this price. That person is making money. He might have exited here. But what about those people who bought between this price and this price? Okay, somewhere in this area. Those people are still stuck. This guy is waiting for 2-3 months. This guy could be waiting for 2-3 years, right? So that's a problem, right? Wrong. That is not a problem because it's been a very long time since this price till here. Probably it's been like 2 to 3 years. Okay, it's been a long time has passed. Okay. So that overhead supply is not relevant or considerable anymore. We never know. This guy might have already booked a loss during these 2 3 years. That guy must have already, given up on the stock by the time the stock has reached here. So this supply is not meaningful. It's not considerable. Of course, there are people who might have held on to the stock for 2 to 3 years. That much patience if people have. Those are the people who might want to sell the stock when the stock breaks that level. But chances are that supply is going to be low. Chances are that supply is not going to be overwhelming. Normally, people lose patience after 1 or 2 years in the stock and they give up. But for those people who are, holding on to the stock for 2 3 years, chances are even if the stock breaks out that level, they might still not sell because they now start thinking that my patience is getting paid off. Okay, I will now see a big rise in the price. So the 3 years that I have been waiting, that was worth the wait, and they might not even want to sell. Okay, so this is one scenario, and this is one scenario. So you will only get these two scenarios, right? So the appropriate thing to do is focus on the 52-week high, ignore the all-time high. And I will tell you from experience, in most of the cases, the 52-week high is the all-time high. Okay, because we are only looking at confirmed stage two uptrending stocks. In most of the cases, I'm telling you. Okay, 52-week high is all-time high. So my point here is you focus on the 52-week high because that's the recent base formation that started from that level. So people might want to exit at that level. Okay. So focus on 52-week high. Don't worry too much about the all time high. It's more or less the same concept. We are just trying to absorb the overhead supply. Okay. Thank you so much.